One of the things I've noticed lately is the primary question I'm getting from a lot of loan officers and then a lot of consumers is regarding collections right now and the impact of these collections to the credit report and the credit scores. We often see different trends occur, and I try to do these webinars based on the current trends, and collections is the trend right now. So who am I? My name is Ivory. I own Insight Strategies. We are a credit education and credit restoration company based in Vancouver, Washington, servicing the entirety of the U.S. with the exception of Georgia, due to state laws there that do prevent credit repair from occurring in that state. We have about 5 people here located in Vancouver, Washington. We're here all different hours so we can service your clients' needs during any time of day. Let's jump into today's material. So I'm going to start by explaining what collections are, how to identify them on the credit reports, and then go into how they're impacting the scores, and finally, what you can do about them, how to deal with them either yourselves personally or for your clients, for those of you that are loan officers. So I know we have a blend here of loan officers and consumers that may be attending this webinar. So again, please don't hesitate to ask any questions at all throughout today's material. So let's start from the beginning. What is a collection? So a collection account is simply an account that has gone past due and that creditor or that original owner of that debt deems it unpaid, uncollectible at that point. So a collection can be held by the original creditor or sold to a third-party collection agency who is a debt buyer. And we're going to explore that a bit more on the next slide. So a collection can occur from any type of debt or any type of payment that's been owed. So any consumer debt, which would be like a credit card, a personal loan, auto loan, etc. You can see collections from an eviction, unpaid medical bills, utility bills, cell phone bills, gym memberships. I mean, you name it. If you owed money to somebody and at some point it was not paid, it can become a collection. We do also see government collections for Social Security income that was, or unemployment income that was overpaid, that you did not then pay back to the government. So most lenders internally will try to collect the debt themselves before resorting to writing it off or passing that collection to a third party. So typically a past due account, if we're talking about, let's say a credit card, for example, won't be charged off and then sent to collections until it hits at least 120 days past due, to 160 or 180 days past due. I always like to remind at this slide to also make sure you talk to the creditor to see what assistance options they have available. Often there are options for modifying those payments, or the option of deferment or forbearance, which essentially can allow you to skip a payment, either put it on the back end of the loan and extend out that maturity date, or just push to the back end and allow for a larger payment for that final payment of that loan. So as I had mentioned, there is a difference between a debt buyer and a debt collector. So your creditor, I'm going to use an example. Let's say it's Citibank. You have a credit card with Citibank. It's gone unpaid and it is, let's say, 160 days past due. Citibank has determined that you are not going to pay them back. So they send it to their internal collections. And instead of you having a monthly payment of, let's say, $200 a month plus your past due balance of, let's say, I don't know, make up a number, $800 a month. So you owe $1,000 to them. Now they're saying you owe that full balance of $7,000, right? So at this point, it is considered due in full. There's no longer a monthly payment that you can catch up on. Citibank can choose to keep ownership of that account, and they may hire a third party to call you as the consumer and try to collect on that debt. That third party could be Resurgent, for example, or ABC Collections. It doesn't really matter. It is an agency that is contracted by Citibank to call and try to collect on that debt. Citibank still owns that debt at that point. Alternatively, what a debt buyer is somebody, a third party agency that purchases the debt. So oftentimes this occurs when with pools of bad debt. So a debt buyer likely would buy that bad debt in an auction. They're bidding on this pool of debt. They're trying to buy the debt for X amount of dollars, but collect more than what they purchased that debt for originally. That debt buyer now owns that debt, and Citibank no longer owns that debt, and Citibank is no longer trying to collect on that debt. And you will see Citibank will show a balance on the credit report of $0 because now they do not have that debt anymore. Hopefully that all makes sense. Let me know if there's any questions on the difference between a debt buyer and a debt collector. Okay. So when can a collection be added to the credit report? So there's no grace period before a collection account becomes eligible for reporting. The exception to this rule is medical collections. So last year in 2022, there were some law changes regarding medical collections. So medical collections can't appear on the credit report until they are 1 year old. So that unpaid medical bill must be a year old before it can appear on the credit report. And now, as of now, medical collections under $500 will no longer appear on a consumer's credit report, whether paid or unpaid. Now, on top of that, the other change that occurred in July of last year is that anytime you pay a medical collection that is on your report, it will be removed from the credit report. So if you have medical debt, medical collections, if you will, or you have a client that has medical collections, if they pay those collections, they will be removed from the credit report. That is true whether it's a settled amount or that full amount that's paid. So very important change that has occurred. Now, one of the things that is new that we're facing, and there's no true answer for yet, is stacking. Really what that is a collection agency gathering, let's say, 5 bills from, let's say, a hospital and totaling them to over $500 so they can add that to the credit report. There's currently no guidance on how that can be handled and the legalities around that. So in that situation, a person could either pay it off, right? Because again, once it's paid, it will be deleted from the report, or pay it under $500. That's a nice little workaround, right? Because if it's under $500, it can't report. So if you have someone where they do not have the funds to pay everything off, but they have enough funds to where they can pay it under the $500, that can be helpful to the credit score. Now, a special call out would be on the mortgage side. There isn't really a concern for medical collections. So we're thinking about this with the score, not necessarily whether you can ignore that consumer having a medical collection, right? That's not a stopping point for them getting a loan. But if the stopping point is a score, and we can remove that account from reporting by getting that bill under $500, it can be quite helpful. Okay. So a collection can be on the credit report for 7 years from the delinquency date of the original creditor. I think this is a really important point to make. And primarily, this is so important because you will see an open date on the credit report for a collection that's going to be very different from that date that it actually was delinquent. So if in our prior example, Citibank charged off your account in January of 2019, and let's say they sold it to a collection agency in May of 2020, the open date on the credit report for the collection is going to say May 2020. But that 7-year timer for how long that collection can appear on the credit report is based on that charge off date, right? So it's based on 2018, not on when the collection agency purchased the debt. Okay. And for those of you who may have joined after we started here, please feel free to ask any questions, chime in with any questions. You can also use the chat as well. And I'm happy to answer any questions you have during the remarks today. Okay, so let's talk about statute of limitations. So we've discussed when a collection can be added to the credit report. Now, statute of limitations is different in 2 ways. So we've got the statute of limitations for how long a debt can appear on the report, right? Or a collection can appear on the report. That's 7 years from the date of the original delinquency. There is also a separate statute of limitations for legal action. When I say legal action, this is going to be wage garnishment or a judgment, right? So the time frame is dependent on the type of debt. And then the state that you live in. So some states, a creditor or collection company may be able to go after you for 5 years for an auto loan repossession deficit balance, where another state, it might be 6 years, another state might be 4 years. So if you are concerned about any legal action being taken against you, you can look up your state's statute of limitations. So regardless of whether they can come after you legally for 4 years, it can report on your credit for up to 7 years. So. And this is an example, I apologize, it's a bit blurry, but this is an example of what a collection may look like on the credit report. So what I want to point out here, identifying a collection, we start off with LHR in this example is the third-party collection agency. I'm highlighting it here. And then you see underneath it says from Capital Card Services. So this is the original creditor, right? So LHR now owns that debt from Capital Card Services. And similarly down here, we've got Midland Funding. It now is collecting and owning that debt for HSBC Bank, right? You can also tell it's a collection because it says collection, right? Quite obvious there. There should be no past due amount because this is not an open and active account. If you ever see this on a collection, that's grounds for disputing it, whether you do that for yourself or with a credit repair organization like us. The balance here is going to show how much they are attempting to collect. This is very, very important. When you look at that balance, it should make sense. It should be something that they're able to prove. And we'll talk about what debt validation means at a later point as well. And then lastly, this open date that I had mentioned, that's going to be based again on when LHR purchased this debt. So this is when they opened it, not necessarily when Capital Card Services became delinquent. So this does not set your 7-year timer. All right. And then lastly, you can see right here in the section that I'm highlighting, TransUnion and Experian are the bureaus that are reporting this. This would be Equifax. As you see down here, Midland is reporting on all 3 bureaus. LHR is only reporting on TransUnion and Experian. So a collection agency does not have to report to every credit bureau. In fact, they pay to report to the bureau. So often you will see collections, unless they're a larger company like Midland is, often will only report to 1 or 2 credit bureaus, which is another reason why it's so important to make sure you pull your credit report from every single bureau so you know what's going on. All right. So where do collections fit into the credit score calculation? They fit into this category here of payment history, which is 35% of your score. So it's the biggest factor that influences your credit score. So somebody who has outstanding positive credit history, if they get a new collection, let's say it's Comcast, because that seems to be a common one, it can drop their credit score 100 points. And we've seen it many, many times where we have somebody who had a perfect FICO and then, they're at 800. And then in the midst of the transaction for getting a mortgage, all of a sudden a Comcast collection pops up and their score drops down 100 points or more. And without getting it removed from the credit report, that score stays the same. So how else does that collection impact the credit score? So we talked about payment history being 35% of your score. If it was a charged off credit card, like in this case of Capital Card Services with LHR, Midland with HSBC Bank, not only do we have the collection appearing on the report for Midland or LHR, we also will have the original creditor's negative account. It will just be a 0 balance. So you have 2 derogatory entries for that account, one from Capital Card Services, one from LHR, and one from HSBC Bank and one from Midland. So you really are impacted twice in the payment history category, once from the original creditor, and then again from the collection. So it can be extremely negatively impacting to the score. Now, if it's something like a gym membership or Comcast or a utility bill, they aren't going to be reporting as an original creditor, right? You're only going to have that collection that's negatively impacting you. But it's an important distinction to make sure you are aware of. Just because Capital Card Services has sold this account to LHR doesn't mean it's no longer on the credit report, right? It's going to stay there for 7 years. LHR is going to stay there for 7 years from the Capital One or Capital Card original delinquency date. So, any questions on that? I want to make sure that makes sense. Okay. All right. And we already went over this, so I'm going to go ahead and skip ahead. Okay. All right. Paying a collection raises my credit score. Sorry, there's an extra S there. Ignore my typo. Paying collections raises my, anyway. So paying a collection can raise your credit score depending. So there's a big if here. Number one is going to be if it's a medical collection, right? We talked about that earlier. If you pay a medical collection, it is deleted from your credit report. Number two, are you looking at your Vantage credit score? So if you're looking at your credit score on a source like Credit Karma, that's not a FICO credit score. It's what's known as a Vantage credit score. It's a completely different algorithm. That algorithm does not mirror this algorithm right here. This is FICO. So the payment history weighting is different. Utilization weighting is different. All of these percentages are different on a Vantage score. And the way that each of these categories is, the way they're assessed is different as well. So the biggest difference is going to be with most of the FICO score algorithms, a paid collection that's non-medical does not help your score. The newest credit score models, FICO 9 and FICO 10, you do see a benefit from paying a collection. The trouble is this is not what's used in most of lending today. And when I say most of lending, I mean for credit cards, for auto loans, personal loans, etc. Now, specifically in mortgage lending, these versions are not used at all. Mortgage lending is still using FICO Classic, which means there is absolutely no positive impact for paying a collection with the FICO score that is used for mortgage lending. So if you are trying to prepare your credit report for getting a mortgage, paying a collection will not help. Here's my big caveat. My big caveat is that if you have a pay for delete with that collection agency, meaning you come up with an agreement with that agency that says, in exchange for this payment of X amount, whether that's a settled amount or not, you agree to delete this from my credit report. You will see a score improvement, right? All else equal, right? Pending there's no new collection that pops up or nothing else negative appearing on your report. So the only way to see that positive increase is for the account to be removed, right? The other method of removal is going to be through disputing a violation of the Fair Credit Reporting Act or Fair Debt Collections Practices Act. So you want to review the credit report for errors. You want to request validation. We're going to talk about what validation is and what that looks like. And you want to know when to contact a professional. Disputing collections or any other type of negative item sometimes is not an easy task. Sometimes it is. Great. But for many consumers, it can be pretty overwhelming and confusing to understand the different sections of the laws. And unfortunately, there's a ton of myths out there on TikTok and all the other social media platforms. So a paid collection still stays on your report for 7 years. If you do pay the collection or you've already paid it, it doesn't mean you cannot get it removed from your report. It simply means you do need to identify a violation of the Fair Credit Reporting Act or Fair Debt Collections Practices Act in order to get it removed prior to that expiration. Now, with many of the newer versions of FICO, as that collection ages, specifically once it becomes 2 years old or greater, it has less impact to your score. That is not true with the FICO Classic for mortgage FICO, to clarify. Any questions on the FICO versions and how they look at collection accounts. Okay, let's get into the meat and potatoes. This is what I'm sure we're getting into the section that I'm sure most of you are most curious about. What you should know if you have a collection and what you should do if you have a collection. So number one, we've talked about this. Don't just rush to paying the collection account. It's our instinct to panic and resolve it right away and just call and pay. But that might not get you the result you're looking for, which is that score improvement. So again, won't automatically remove it from your credit report unless you negotiate the pay for delete and make sure you get it in writing that that collection agency is going to delete it from your credit report. Okay. And then you do have rights as a consumer to request proof that you owe that debt before paying it. And that's what validation is. And let's talk a little bit about the consumer protections that exist. And then that's going to segue into the validation process. So a collection agency is required to notify the consumer of the purchase of the debt within, and then give you as the consumer the right to request validation or the right to dispute the debt within 30 days, right? So this works two different ways. One, they may not be able to find you or locate you, so they may not notify you of the debt. The second, they make contact with you, they have 5 days to provide you with notification that you have the right to dispute the debt and you have that 30-day time frame to do it. Okay. So at that point where you're made aware of the collection, whether you pulled your report or you got a notice, it's time to request validation. Validation is a request of proof that the debt being collected is yours, to put it really plainly. So to be legally valid, basically to have all the protections under the Fair Debt Collections Practices Act, you do want to make sure you're requesting the debt in the validation in writing. So I got a question that I just saw right now, so I apologize for missing it earlier. The age of the collection doesn't have any impact on FICO 2, 4, or 5 ? No, it doesn't. So the older versions of FICO don't have time weighting built into them like the newer versions do, unfortunately. So no is the short answer there. Back to validation. So a verbal phone, like if you're on the phone with that debt collection agency and you're asking for proof, you don't have the same protections. Please make sure you're always requesting proof in writing. It doesn't need to be anything super fancy. And if you're not sure what to ask, CFPB's website, the Consumer Financial Protection Bureau, has some templates, or contact a professional. So you want to verify the debt's yours. You want to confirm you haven't already paid the debt. I can't tell you how many times I've talked to individuals who said, yeah, I've paid this like 3 times. They just keep selling it. I keep paying it. It keeps showing up. The debt collector must prove that this debt is real. And you must make sure that the debt collector is authorized to collect on the debt. So the main thing is having the proof. So there's a lot of moving parts when it comes to the laws around debt collections. So I'm going to simplify it for the sake of our conversation today. But basically, the debt needs verification of the debt needs to prove that you owe the debt. The amount of the debt needs to include documentation from the original creditor. So let's say it's a cell phone bill. Do they have your original contract from the cell phone company? Does it say they could charge you those termination fees? Does your original contract show each of the contract numbers from all the devices and then the charges? Are they showing you statements from the time that the account was current all the way to when it was past due and then sent to the collection agency, right? If they cannot supply you with this proof, that's not proper validation, right? And with other types of debt, like a repossession, for example, it becomes significantly more complicated because there are requirements in different types of notices that should have been sent to you as a consumer. So if you do have something like a repossession on your report and it's with a collection agency or even still with that original creditor, I highly suggest you reaching out to an attorney or a credit restoration company. Okay, let's see. Let me make sure I didn't miss anything here. So we're going to go through some of these common questions after this, but if the debt collector does not send you sufficient proof of the debt, they're not allowed to continue pursuing you for the debt. They can't try to continue to collect on a debt that they have not provided you validation for if you've requested validation. So that means they cannot call you. They cannot send you notices offering settlement. Those are all considered attempts to collect a debt. Most people just don't know what to do, or most people just aren't sure what's a valid validation, if you will. So the other thing you want to pay attention to is determining whether you're in the statute of limitations for one, how long, like let's say you get the validation, you get the proof, and you're able to determine, okay, this debt became delinquent 6.5 years ago. At that point, it's kind of going to be a judgment call. Do you just want to wait for it to fall off your credit report? And then also looking at the statute of limitations for legal action. Are you past that statute of limitations for legal action? If it's a high dollar amount debt, it may be in your best interest, if you're trying to save money, to just wait for that to fall off your report, or see if you can get it removed from some other violation outside of the validation process, because there's a lot of laws around how things can show on the credit report. And then I think I covered this, but within 5 days after the debt collector first contacts you, they must send you that written validation notice, or if you contact them because you saw it off of the credit report. So that notice itself, it needs to show the amount that you owe, the name of the original creditor, and how you can go about disputing the debt in writing. If any of that is missing, it's a good idea to consult an attorney and see if you can be awarded some damages under FDCPA. Okay, so let's go through some common questions. Does requesting debt validation restart the statute of limitations? No, it does not. It's a big question I have that comes up quite a bit is, well, if I alert them that I want validation on this debt, are things going to get worse? Is my credit going to be negatively impacted? No, is the short answer. No. What happens if you don't dispute the debt within 30 days? If you get one of those notices and you do not dispute the debt within 30 days, the debt is assumed to be valid. So that means the debt collector can continue to contact you. You can still send a dispute after the 30 days. But it's just different requirements at that point. You have more protections is really the best way to put it if you dispute the debt immediately, right? And oftentimes we can prevent it from appearing on the credit report, because sometimes they'll send you that notice before it's even on the report, and they'll say, hey, we're not going to report it for 30 days until you send, during this 30-day window, if you send us a dispute or a request for validation. So what happens if the debt collector does not validate the debt in 30 days? If they don't validate the debt, and they continue trying to collect, this is what I was alluding to earlier, you are able to countersue for up to $1,000 for each violation, plus attorney fees and court costs. So here at Insight Strategies, we have a partnership with an attorney where the attorney will take up these cases for you. And there's no cost to our client base, because as this states, the debt collection agency is responsible for those costs. So they are required to pay the attorney fees, right? And then the clients get those $1,000 violations in full. So pay attention to all of the documentation or lack thereof documentation, and you may have a little bit of pocket change on your hand, a little bit of money you can put towards the closing of a house. So, and what are the most common FDCPA violations? So again, that's the Fair Debt Collections Practices Act. Here's the most common ones. Number one is continuing to attempt to collect on a debt not owed. This is very common. We see this all the time, where you request validation, they ignore your request, and then they send a settlement offer. Very common. Number two, illegal or unethical communication tactics. There are rules against, or laws, excuse me, based on when they can call you, how often they can call you, who they can contact, how many times a day, how many times per week. So it's really important to keep track of every attempt that they've made. Document absolutely everything. Document what they say. Keep every document they send to you. And you can have it reviewed and see if there's violations there that an attorney can help you with. And, if there is a violation, it's not just about getting the damages, but it's about guaranteeing that removal off your credit report. So number 3, disclosure, verification of debt. So the agency, that collection agency, fails to send written debt validation notice. So this we see a lot. All of a sudden you see an item come up on your credit report and they never sent you any notice that they had a debt collection for you. You had no idea. All of a sudden you get your credit pulled and you're like, what the heck is going on here? I did not know that this existed. So that is a violation. Taking or threatening illegal action. So we do see this often enough, not as often as the prior mentioned, but them threatening to sue you. If they threaten to sue you and they do not follow through, that is a violation. Or threatening to garnish your wages, confiscate personal property, the home, contact authorities. We see all sorts of threats there. That's a violation. False statements or false representation. So implying that they're a law firm if they're not, or them trying to collect more than you owe. You'd be surprised how often we see this occur, where the collection agency sends a letter saying you owe $650. We ask for validation, we get validation back, and the amount owed is really only $400. That's a violation, right? That can allow that debt to be removed from the credit report, but also allow damages to that consumer, right? Improper contact or sharing of information. Really, they're contacting people they shouldn't be contacting and exposing details they shouldn't be exposing, and then excessive phone calls. So as I mentioned, there are requirements, there are laws around how many times they can attempt to contact you. Let's see. So continuing to report the debt to the credit bureaus after sending a validation, is that a violation? No, it's not a violation. So not at that point. As long as they're not attempting to collect, which would be a phone call, written communication, just trying to contact you in some way to collect a debt. So what to say when a debt collector calls you. So sometimes what we see is our clients will get phone calls from a debt collector and they don't know what the debt's for. They don't see anything on their credit report yet, and they haven't gotten anything in the mail. So the best thing you can do is ask who the company is, why they're calling, ask how they got your contact information, tell them that you're not refusing to pay, but you want to know what they'll do if you don't pay. We're really just trying to get some information here. And the most important thing, as I have highlighted here, is please send me a request in writing. We want all communication in writing. Okay. Now here's some of the dirty tricks we see from collection agencies trying to blackmail people into paying. As you get closer to 7 years, they know the account will fall off the credit report and you won't have the motivation to pay. So they'll re-age the debt. This is an illegal practice. When they re-age the debt, they're either changing the account number, changing the dollar amount slightly, trying to change some activity and reset that timer. So a lot of times they're resetting things to make it on the back end to make it look like it can report longer. So they're making the debt look like it's newer than it actually is, I guess is really the best way to put it. They want it to stay on more than 7 years. Sometimes what we will also see is, let's say we request validation from ABC Collections. They don't have the validation, so they hurry and sell it to DFG Collections. I don't know. And then all of a sudden you get a new collection on your report for that same account from that original creditor. ABC Collections will fall off your credit report, and now you've got a new account on your credit report from that new collection agency. Sometimes that just makes people pay because they feel just so like frustrated. Don't fall for that. If a collection agency is turning around and hurrying and selling your debt, there's likely an issue with that debt. And that means you should barrel ahead. Don't give in at that point. Okay. I'm going to open it up for questions here. This is just my contact information. So if you have a collection on your credit report, you have a client that does, give me a call. schedule a consultation. I don't know why I didn't put my email in here, but I'll put it in the chat. Email me. Always happy to review any specific situation. Let me put my email for everyone in the meeting. Now, what questions do you have? Everyone's been quiet. I know you've encountered collections. What are the weird scenarios you're seeing that you want to know more about? You can type in the chat. You don't have to speak up if you don't want to. Okay, here's a common question. How long does it take to get a collection deleted from the credit report? So if you dispute a collection with the collection agencies, with the credit bureaus, they have 30 days to investigate. So in most cases, it's going to take at least 30 days because they're going to take the full time frame they have under the law, right? We have seen things fall off the report in under 30 days, but that's definitely not necessarily the norm. As far as getting collections removed from your credit report, collections tend to be the highest likelihood of removals. There's just so many laws, so many issues with these third-party agencies not having proper documentation. They tend to have the highest removal rate out of any negative item on the credit report. What's the difference between a charge-off or a collection? Great question. So a charge-off is going to be the account with the original creditor. So a collection is going to be with, if you see a collection on your credit report, it's going to be with a third party. I wish I had a good example. Let me stop sharing real quick, and I'm going to see if I have an example I can show you. Handy. So the best way to think of a charge-off is, it's kind of, my comparison is it's like a foreclosure for something that's unsecured, right? So you have a credit card, you never paid it, they close the account and they say, this person's never going to pay us. You now owe $7,000. You don't owe your monthly payment anymore. If that creditor then sells that account to a third party and it pops up on your credit report, that third party account is what the collection is. And then the charge off is still with that original creditor and still on the report. Let me see if I have a example here. Does that make sense? Did that answer your question, Jennifer? And I think we had another question about, okay, good. I thought we had another question about a bankruptcy, but I don't see it anymore. A charge off with an open status. It shouldn't have an open status. I mean, that's definitely an issue you can use to dispute the account. So let's talk about disputing real quick, because I'm sure most people have questions about that. You've got the dispute process we've talked about with the collection agency, right? Primarily going after validation. That's kind of where I focus in on with anything with a collection agency. Now you've got a separate dispute path with the credit bureaus. The credit bureaus can only report can only report accurate information on the credit report. So anything that's inconsistent, incomplete, or obsolete can be removed, right? Anything that's a violation of the Fair Credit Reporting Act, that just tends to be where we concentrate. So if you're seeing discrepancies in reporting across the bureaus, that's something that you can utilize in the dispute process to try to get an account removed. So the Fair Debt Collections Practices Act is pretty heavily focusing on that. In this case, for the sake of our conversation, the collection agencies, where the Fair Debt Collections Practices Act is more heavily focused, let's say, for the sake of our conversation, on the credit bureaus and their reporting. So if you are doing the dispute process yourself and not working with a credit repair organization, it's really important to dispute that account with the credit bureaus and then also with the collection agency. Go after validation with the collection agency, and with the bureaus, go after those inconsistencies, like you finding an open status on a closed account, right? If the account's charged off, it's not open, that's inaccurate reporting. You're required to report accurate information on my credit. This isn't accurate, delete that account, right? So that's kind of an example of how you could dispute that. So hopefully that answers your question, along with my long rambling tangent. How effective is a Chapter 13 to remove collection data from the scoring models? It doesn't necessarily remove anything from the credit report. The Chapter 13, any account that's for bankruptcy in general, any account that's part of the bankruptcy is now just going to have the bankruptcy status attached to it. So it's up to that collection agency at that point if they want to remove it. Maybe they choose to remove it because they don't want to pay to report it. That's probably going to be the most likely way they choose to remove it. But in my opinion, I just don't see that as being necessarily a method to try to get collections off the credit report. And your report's going to suffer pretty heavily once the payment plan is done from the Chapter 13 bankruptcy. You're not going to see a big impact during the payment plan. It'll be after the payment plan concludes that you'll see the score drop from the 13. Let's see. What other questions do you have? Collection accounts, dispute process, anything really credit related. We're all here. So we've got a few minutes before we're ending today. Nothing, quiet crowd today. Okay. If you have a private question, feel free to email me. Like I said, I put my email in the chat. I'll send a copy of this recording. We have a couple other collection recordings on Facebook. So if you are interested in learning more about collections, it's on Facebook. Oh, Facebook, I meant YouTube, goodness gracious. So YouTube is where you can access everything. Insight Strategies on YouTube. What's the best way to handle collection agencies? Should you negotiate with them? No, I don't like negotiating with them. My recommendation is validation. Number one, request validation, request proof. If they have the proper proof, pay for delete. That's the way to go. If they don't have the proper proof, if they're not abiding by the laws, absolutely no reason why you should be negotiating with them, right? Just as you have rights, or just have they have rights, you have rights too as a consumer. So if you are not sure what to do, get professional help, especially if like with our new relationship now with the attorney base, if we're seeing these violations, we can pair them with our attorney. They're not paying anything for the attorney, and they may be awarded damages plus the removal of the account. So easy solution, pay for deletes. It could cost you more in the end than just working with like a credit repair organization. So would a late payment on a credit card be similar process to have it removed? Late payments you're primarily going to go after inconsistencies in the reporting. So that's going to be, let's say you were late in August 2020, your credit report is showing that you were late in September 2020. That's an issue. Let's say you paid on the 30th day and they're reporting you as delinquent. That's an issue. Let's say one credit bureau shows you late in August and the other two credit bureaus show you late in September. That's an issue, right? So you're looking for anything that's inaccurate that you can use to get that late payment removed. And then another option would be going to that original creditor and just seeing if they have any policy to where they do goodwill removals, right? You don't have a history of late payments, but you're hoping to have just this one removed because of whatever incident occurred. There's also, because of the CARES Act, if you received any sort of an accommodation during COVID, meaning they waived a late payment, they gave you a modification, a forbearance, a deferment, and that brought you current, then the late payment needs to be removed from the credit report, but it must have brought you current. So late payments are different. They are probably the hardest thing to get removed, but certainly not impossible. Again, it's just all about utilizing the Fair Credit Reporting Act and Fair Debt Collections Practices Act for everything when it comes to the dispute process. I think that's often overlooked. If you are watching a lot of social media, you're going to see a lot of tricks, hacks, a lot of things that this works every time. It's probably BS. At the end of the day, use the laws. The laws are what protect you. And I mean, every day we get a lot of things off of credit reports because there's a lot of legal violations. So if you're not sure and you are wanting to do it yourself, go to our YouTube page, Insight Strategies. There's a ton of how-tos on there. Ton of long webinars, but hopefully, I don't know, I'm rambling now, but hopefully that answered your question a bit. And then we have a course. Actually, if you want to learn the laws, I suppose I should shout that out, trycreditworthy.com. That's going to go into the laws. So you'll be able to do the dispute process. For the attorney in-house, how does that work for clients here on the East Coast? They're nationwide. So the attorneys that we have, because Fair Credit Reporting Act is federal, the attorneys and Fair Debt Collections Practices Act, the attorneys can work in any state. So, yeah. Any other last minute questions before I let everyone go and get back to your busy days? All right, well, I will send out this recording hopefully by the end of this week. If not at the earliest, or at the latest end of next week. And then I hope everyone has a good Memorial Day. And feel free to email me with any other questions we didn't cover.
Thanks, Ivory. Happy holidays.
Thanks. Bye, everyone.